Hello everyone, welcome to Just Invest Today, and today we are talking about Alibaba and Beijing cracking down on Ant Financial, making sure it's a separate entity. And man, how's this news coming back up again? Holy! Yo, I swear we've been talking about this 8 months ago and just came out again in the Financial Times, which causing a little bit of an Alibaba sell-off. That's alright, it's okay. We understand as Alibaba shareholders that we're going to be bombarded with news article after news article after news article bringing down the share price again and again and again. But we got to take those blows and we're going to keep fighting another day. So let's get into this article, man, because, man, this is huge, but not really, because we understand what was happening before, but it's just getting into it again now. So Beijing to break up Alipay and force creation of a separate loan app. So that's what the government is telling Alibaba to do, because man, it was loaning. Alibaba was playing in a weird area where it wasn't a bank company, but it was allowed to loan out and use credit. It was using all that data to be able to just loan out money to just individual people, to business entities, all of that good stuff. So this is what the government wants for the company, and it's make sure that it doesn't lead to some crazy crash down the road. So Beijing wants to break up Alipay, the 1 billion plus user super app owned by Jack Ma Ant Group, and create a separate app for the company's highly profitable loan business in the most visible restructuring yet of the fintech giant. And you also have to remember, people are just looking at Ant Financial is just like the credit business or the loaning. Like there's separate entities in Ant Financial. Like they have the credit, they have the loan, they have asset management, and then they have the payment. So this is just affecting one side of it. I think it's like 30% of what Ant is. But then you have to remember too that Alibaba only owns like 1/3 of the Ant Financial, basically its profits. So it was only getting, like, people had the value of like Ant Financial around like what, 200 billion maybe, and maybe even lower now. People probably, because of all the crackdown on the loaning business, probably had it lower. So the benefit for Alibaba was only like 30-40 billion, and that's a lot of money still, but they're not getting rid of the company. They're just making sure it's more secure and you have a back payment. You have that money in the reserve in case anything goes awry. So that's what they're regulating. So the Chinese regulators have been already ordered Ant to separate back end of its two lending businesses. I'm probably gonna butcher this, but Huobi, which is similar to the traditional credit card, and Juebi, which makes small unsecured loans from the rest of its financial offerings and bring in outside shareholders. So that's what it was. There are two separate entities in this Ant Financial, which one was a credit card and one was the actual lending. The plan will also see Ant turn over the user data that underpins its lending decisions to new credit scoring joint venture, which will be partly state owned. So this is where people are getting a lot of pushback, and people are saying that this business is not even like Alibaba's anymore. It's state owned, because we understand what the government has been doing. They are cracking down hard on any loose data. They want to make sure all that data is secured. And can you imagine any of this lending data or any of the user data that Alibaba has gets out anywhere? So they're going to be super secure on making sure this data doesn't go. So now this data has to go state owned, and it has to go to other banks, so they don't get that huge monopoly advantage that the whole government is worried about. You just seen the article, just Alibaba has to open up to Tencent, Tencent has to open up to Alibaba, and now everyone can use their data. That's huge with the data, because now Alibaba is going to understand what Tencent's doing, Tencent's going to understand what Alibaba's doing. So do you see how that's working out, and how that's going to come to like a swivel? Like, it's crazy. So the government believes big tech's monopoly power comes from their control of data. See, that's what they're thinking. So now the government is taking that data. So it was basically saying that no, Alibaba, you're not gonna have this monopoly power because you have 1 billion users and you understand how to lend to them, right? So they're lending all this unsecured debt to all these individual people, which the government doesn't want because what if all those people are not able to pay? You gotta think of it like that. That's gonna create a huge downturn in the economy. And look what the government's doing with real estate too. They're cracking down on real estate because they don't want to crash again. They don't want anything hindering the system. So the government is being actually proactive in what's happening right now. And we see right here, Ant's growing share of revenue from lending. Look at this. This is lending. So lending was 39% in 2020 quarter one. So you can see that that's a strong amount. Like that's I'm not even gonna kid you. It's a strong amount. So how is that gonna? What profit is that gonna go to Alibaba? Like is it gonna be half to like the state now, and then half to Alibaba? Or like what's happening with that? But this is what I'm talking about. They still have the wealth management system. They still have the payment segment, payment, wealth management, and innovation. So they still have ways to generate profit moving forward. It's not the end of Ant Financial. That's the key thing I want to like get you guys to understand. It's not the end of Ant Financial, but then people are saying the company is going to be state owned and government run. So if the government's going to run it, then are they not going to be as profitable as before? Because usually when the business is private, they're able to do more trickery, doing more stuff. They can like get in it and just be very competitive. But with all that government oversight, is it going to stop basically the company from growing, right? And that's what people are worried about, which is this is a good understanding. Like that's something that you can actually take into account and be like, whoa, this is not going to turn out well. But you have to remain solvent because think about it. This Alibaba is like you got to remember the fundamentals of Alibaba, which is e-commerce. And their e-commerce business is their main key driver. Tmall and Taobao, like that's their main driver, and their ability to expand other places right now, like in Southeast Asia. So we don't have to just say, oh, because Ant Financial is going through this, which can be a good thing, because once at IPO, boom, this company is gonna go crazy if at IPOs at the end of this year or maybe in the middle of next year, which is gonna be a huge push for the stock. Huge push for the stock. You're gonna see the stock going crazy. Imagine that IPO, man. Holy crow. I can just imagine, man. So I know we're not out of the woods yet, but there's still a lot of stuff coming down the pipeline. So a person close to Ant said that for the time being, Ma's team would be at the helm of the new venture. See? They're going to be under the state. So what is the government going to be doing with the company? Because now they're going to have that oversight. So how is that going to affect it? And this is what's all going to come down to. So the new venture will apply for consumer credit score license, which Ant has a long coveted. China's central bank has issued only 3 licenses, all to state-run operations, preventing Ant from fully monetizing. The vast reams of the data is collected on the Chinese citizen, but under the plan being considered, Ant will lose its ability to independently assess borrowers' credit worthiness. For example, a future Alipay user in need of credit would see their request first routed to the new joint venture credit scoring company where their credit profile held, and then on the new Huobi and Jebi lending app to issue the credit. So the government is gonna take all that data first to see if it can lend to that creditor, and that's what they wanted to make sure that the people getting these loans are actually able to pay it off or pay in the future, because they're trying to prevent that crash from happening. So we can see this 2 ways. Like, is this a good thing or a bad thing? Like, the government is preventing a crash and making sure all that data doesn't get out to anyone or to a different entity, right? And they're making sure these loans are secure with Ant Financial having that government, that bank deposit, the reserves, in case anything happens, they're able to pay back what they're losing. So you can see that as a good thing. But then the negative thing is that government oversight is going to prevent the growth of Ant Financial going forward in the future. But then you got to remember that Ant Financial still has Alipay, it's wealth management, and that's still all going to, and it's innovating, so all that is still going to benefit the main company. People are forgetting the main company is Taobao and Tmall. The main source of revenue for Alibaba and the future of Alibaba is not Ant Financial. They own 1/3 of it. That's not what it is. It's still the e-commerce section and how Alibaba is still expanding, growing, innovating, all that good stuff. So, tell me what you think of this video, man. Like, is Alibaba, like, how much is this gonna affect Alibaba, the actual company, this Ant Financial spectacle? We knew this was happening. We knew this was coming. This was like an 8-month-old story, but it came back up again because probably it's like coming down in pat right now. So tell me what you guys think of this new article. What's happening with Alibaba? Is Alibaba still gonna go strong into the future, man? So, like, subscribe to my video. Man, I'll be back in the next video.